Now, you've read the question. I need to read the question as well. And in reading the question, my recollection is that this question has a bit of TMI. Too much information. SAR purchased 80% of the equity of LA 3 years ago. So I am SAR, I am buying 80% of the equity of LA. That gives me control. You have a subsidiary. There has to be a parent and a sub in the context of a group structure, and we have this relationship that has been there for 3 years. Now, LA has then purchased an investment in Vi. So LA has purchased an investment in Vi, and this purchase of an investment in Vi occurred 2 years ago and was a 70% relationship and occurred 2 years ago. And then we get an additional scenario where 6 months ago SAR buys effectively the remaining shares in Vi. So it buys 30%, and it buys those 30% 6 months ago. And so I've got my percentages sorted out, I've got my dates sorted out, and there are several pressing questions that we have to resolve. The first is not even worth talking about in any detail, but SAR does control Vi, because SAR controls LA, LA controls Vi, so SAR is in control of Vi. So therefore, Vi is a sub, there's no doubt about that. And we're being asked to calculate goodwill, and you only calculate goodwill for subs anyway. When did Vi become a sub? Did Vi become a sub of SAR 3 years ago, 2 years ago, or 6 months? 2 years ago, yeah. It's always at the most recent date of when the parent buys the sub and the sub buys the sub-sub. If those two dates had been the other way round, if SAR had bought LI 2 years ago, but LA had bought Vi 3 years ago, the answer would still be 2 years. So we've got a sub for 2 years. Now the group interest is 80% of 70%, which is 56, then plus the direct of 36, so we get 86. So the group interest in Vi's profits is a combination of a direct interest from A, a direct interest from C, which is 30%, and then an indirect interest from LA, and an indirect interest from LA, which is 80% of 70%, which is therefore 56%. So if I'm looking at a group context, although it sort of would appear that we've got 100% of the votes in Vi, we are in control of Vi, it does have an NCI of 14%. And it has been a subsidiary, it has been a subsidiary for 2 years. It's been a subsidiary for 2 years. So we need to calculate the goodwill based on the net assets. Back I go, back I go, back I go. So here I am, I'm calculating the goodwill, I have here, in terms of my goodwill calculation, I have the direct investment. Now the direct investment was 200. Oh, time out. This is the split of profits for the last 6 months. This is the split of profits for the last 6 months. But if I'm calculating goodwill, I need to calculate the goodwill of 2 years ago. I got control of Vi 2 years ago. And 2 years ago, that 30% didn't exist. At the date of acquisition, when I got control 2 years ago, what was happening? 2 years ago, my investment was 56.44. This 30% that I'm buying later is not a step acquisition. This 30% that I'm buying later is effectively a reduction in the NCI. I have got control, I have got goodwill 2 years ago. So what did I pay 2 years ago? When I'm calculating the goodwill at the date of acquisition, I want to have all of my ingredients at the date of acquisition. I want to have all of my ingredients at the date of acquisition. So this is the goodwill 2 years ago. So this means I want the fair value of the parent's investment 2 years ago, and therefore, effectively, the too much information is the 6 months ago story. So I have got my indirect investment. I have got only, effectively, 80% of what LAR paid. LAR paid something in the order of 400. Yeah? I will then take 20% of that to the NCI of 80. So the NCI will go down by 40. So my effective investment is 320. The NCI is calculated as a proportional basis. The proportional at the date of acquisition is 44%, and at the date of acquisition, the net assets are 250. And 44% of 250, I'm not sure what that is. 44% of 250 is 88, plus another 22. So what is that, 110? 110? Yeah? And then the fair value of the net assets at the date of acquisition is 250. So this gives you whatever your goodwill is, and that gives you a goodwill figure of, I don't know, 430 minus 180? That gives you a goodwill figure of 180. So, yeah, for a moment there, I nearly fell into my own trap. Yeah? There's lots of net asset figures there, but the net asset figure is 2 years ago. That's the one that's relevant. So the NCI 2 years ago is what is relevant. Does that make sense? Yeah? And the other 30% that you're buying would be effectively a reduction in the NCI. And so there would be a reduction in the NCI. There would be a reduction in the NCI. There would be a control to control, yeah, in relation to the spending of the 30%. But yeah, I don't want to. Can we do that? Should we do that? I think we could do that. Actually, I think we've got the ingredients. So there's a reduction in the NCI. There is a control to control relationship, and the cash that has been spent, and this is 6 months ago, the cash that has been spent 6 months ago is 200. So we did all this yesterday. So this is revision of revision. I have control. I then directly spend another 200 million, reducing my NCI, because I am buying another 30%. So the cash is 200. I am going from, if I'm not mistaken, I'm buying 30%, aren't I? Yeah, I'm buying 30%. So cash in or cash out? Cash out. So this is in the nature of an investment. This is effectively going to be a debit. So I'm reducing the NCI balance. So I have here a decrease in the NCI balance. So what I need to know is the NCI balance that exists at the reporting date. Well, what's the fair value of the net assets at the date that we're doing this? The fair value of the net assets at the date that we're doing that is 300. There's no goodwill attributable. By the way, I ignored the 10 million in professional fees. Sorry, I did that a bit quickly. I ignored the 10 million in professional fees because they should be expensed. The NCI that we've got at the moment is 50. The NCI we've got at the moment is 44%. So 44% of the net assets, don't belong to us, and there's no attributable to the in respect to the goodwill. 44% of 300 is 44% of 300. 132. Now the fraction that I'm buying 30 out of the 44. So I'm buying 30 out of the 44. So the NCI balance would be 132. The NCI balance would be 132. You could work that out another way if you wanted to, because you would know what the NCI balance was at the date of acquisition, add on the share of the post-act. But I think I want to take a shortcut. 30 of 44 on 132, no idea what that is, probably about 100. 90, nice round figure, must be correct. And therefore we've got 110 as your difference. This is going to reduce your NCI. This is going to reduce your working for. This is going to be a difference that we take to reserves, and that difference that we take to reserves is 110. How are we feeling this morning? How are we feeling this morning on a Saturday morning? Studying P2. Put your feelings aside, because you must be feeling happy because it's the weekend. You must be feeling happy because you're learning. But put that happiness to one side. Concentrate on that figure of 110. Just looking at that 110. Does that 110 make you feel happy or sad? Sad, because you paid out so much money. Yeah? It feels like a loss. Can't call it a loss because it's a transaction within equity. So this is a negative, and this is a reduction in other components of equity. This will be a reduction in working set. Gosh. I think we need to do an exam question. In fact, I think you need to do an exam question because sometimes exam questions are easier, sometimes they're more difficult, but you do need to do an exam question. Now, what I want to do is to tell you, remind you of a typical structure of an exam question. So typically in an exam question, paragraph 1 relates to subsidiary number 1. There's a parcel of information that you can process around the goodwill of sub 1, the post-acquisition profits of sub 1, the impairment loss of sub 1, the control of sub 1. You are able to process everything to do with the first sub in the first paragraph. The reason he breaks the information down into paragraphs is to help you. Paragraph 2 will typically relate to subsidiary number 2. And normally subsidiary number 2 is more difficult because it's the sub-sub or the foreign sub or something weird is happening. Sometimes sub 1 looks a bit F7 and sometimes P2 looks a bit more, sub 2 looks a bit more challenging. You are then able effectively to draft the statement of financial position. Now at this stage, you have got something like 25 marks and you have got a budget of something like 45 minutes. So typically, you might think that you've got something like 15 minutes here, 15, 20 minutes here, 15, 20 minutes here, and then a kind of manic 5 or 10 minutes here. Yeah? So in terms of budgeting, yeah, what you've got is 15 or 20 minutes, yeah, depending, you know, I can't be too precise. But in terms of minutes, yeah, you've got a budget of 15 or 20, you've got a budget of 15 or 20, and if you've gone for a budget of 15 or 20, then you have to go for a budget of 15 or 5. Alright? Because the actual number crunching on the group accounts only actually represents 25 marks. Now you will then have paragraph 2, paragraph 3, and these are going to be accounting adjustments of the parent. And these represent an extra 10 marks. So these represent an extra 10 marks. So in terms of minutes, these represent an extra 18 minutes. Because one of the things that I'm vaguely obsessed with is time allocation. Because an exam question overall, if it is for 35 marks, an exam question overall, without the reading time, is taking you 63 minutes. So you do have an opportunity to read the question, but once you've basically read the question, there's a little bit of reading time, you've really only got an hour to do the question. Life is going to be too short for you to actually physically add up the balance sheet, and life is going to be too short for you to physically even bother to add up retained earnings, NCI, or other components of equity. Yeah? Get a life, be realistic, spend your time earning marks. Sometimes some of these accounting adjustments are difficult, and you are at liberty to choose. You don't have to do, that should be paragraph 3, shouldn't it? Yeah. You don't have to do these accounting issues in any particular order, just so long as you're leaving a strong audit trail. I would like us to have a look at a past examination question. And past examination question I would like you to have a look at is on page 47. And this question that is on page 47 is a past examination question, and it is called Mini.